Is the JP Morgan Nasdaq Equity Premium Income ETF, ticker symbol JEPQ, worth looking into as soon as possible for dividend-focused investors that also want to see some capital appreciation on their holdings long term? Now, the simple answer is yes, so make sure you stay tuned to this video because we are going to go over everything there is to know about JEPQ and more. Right after you, please drop a like in this video and subscribe for more content like this in the future. So I'm sure a lot of you more dividend growth focused investors probably heard at this point that JP Morgan came out with yet another income ETF, this one known as JEPQ. Now JEPQ is not to be mistaken by the older premium income ETF known as JEPP. But as you're going to see in this video, JEPQ and JEPP do have a lot of things in common, but also have some very prominent differences. So first, let's go over some of the basics. JEPQ is designed to provide current income while maintaining prospects for capital appreciation. So this fund's goal is to pay income on a monthly basis, but also hopefully see some capital appreciation on top of that. Now JEPQ generates income through a combination of selling options and investing in US large cap growth stocks, seeking to deliver a monthly income stream from associated option premium and of course stock dividends. So just like JEPP. So far, once again, for the investors out there that are familiar with the JEPI, the JEPQ ETF, you're probably asking yourselves right now, well, at this point, what's the difference between JEPP and JEPQ? Because as you know, when it comes to the JEPQ ETF, that fund also seeks income and capital appreciation by selling options and of course getting paid dividends. But stay tuned because we are going to go through the differences and they're very, very important. Now, JEPQ seeks to deliver a significant portion of returns associated with the Nasdaq 100 index with less volatility. And JEPQ constructs a long equity portfolio through a proprietary data science-driven investment approach designed to drive portfolio allocations while maximizing risk-adjusted expected returns. And before we go any further, let's look at the investment process that JP Morgan has for JEPQ. So it says step 1, underlying equity portfolio. Apply data science process utilizing 40 plus years of JP Morgan proprietary data to create a fundamental framework for security selection and portfolio construction. And then with that, the fund has an option overlay, 1 month out of the money call options, and give investors a portion of the upside with reduced volatility. So when you are selling cover calls, you are of course earning a nice premium, which in this case, this fund pays out a portion of it to the shareholders. But also when selling covered calls, you are also reducing volatility. But at the same time, you are also putting a cap on the upside potential for the underlying equity. Now, by utilizing both of those, it says JEPQ, a well-represented, fundamentally driven Nasdaq 100 strategy that seeks to provide clients with a monthly distributable income via option premium and dividends. So simply put, if everything goes right in the fund and within the monthly time frame, as long as everything goes well, investors of JEPQ should be paid a nice consistent dividend on a monthly basis. As of May 31st this year, the yield is 10.75%. which is interestingly enough surprisingly higher than JEPQ's brother, which has a 30-day SEC yield of 8.48% only. But looking a little bit deeper into the JEPQ ETF. So the fund was started back in May of 2022, so it hasn't been around all that long, which for me personally as an investor is definitely a red flag. I try my best to not invest into things, at least not a significant amount of money, into stocks or ETFs that haven't been around for a while. Even though historical performance doesn't mean that a stock or ETF is going to perform the same way in the future, it does give me a little bit of peace of mind when I see a fund or a stock that has a long-term solid historical performance. But with JEPQ only being around for just around a year now, we don't have all that much data to go off of, although so far it's done pretty well, which you'll see in a second here. Now, maybe one of the most important aspects of JEPQ, especially when you compare it to JEPP, is the underlying holdings. The stocks and assets that the funds hold are significantly different. Now, if you look right here with JEPQ, for example, the holding breakdowns are technology, almost 50%, communication, 16.27%, consumer cyclical, 15%, healthcare, 6%, consumer defensive, 5%, industrials, 3%, utilities, 1%, financials, 1%, real estate, and energy, less than 1%. With the top few holdings being things like Microsoft, Apple, Alphabet, Amazon, and look at the amount of the overall fund that these few holdings make up of the entire fund. These are big pieces of the entire fund made up of just a few of the top growth names throughout the markets. Now, this was definitely interesting to me because if you look at something like JEPP, the JP Morgan Equity Premium Income ETF, JEPI, You can see that technology does make up a decent amount of the breakdown, but only 16.91%. Healthcare being 13, industrials being 13, consumer defensive being 13, financials being 12, consumer cyclical being 9, utilities being 5, communications being 4, real estate, basic material, and energy being around 3. And also the top 10 holdings in JEPQ are much more well diversified, being that any given name doesn't make up of more than 2% of the overall fund. Where once again back here at JEPQ, you can see that something like Microsoft, Apple, and Alphabet, just those 3 names make up of well over 25% of the entire fund. So what does that necessarily mean for JEPQ? And what does that mean for this fund overall? Well, because JEPQ does invest very heavily in the NASDAQ, very heavily in growth names, and with a large emphasis on piling a large amount of cash just on a few of some of the most popular growth names in the entire market, you are likely going to see bigger swings to the upside and the downside when it comes to investing to JEPQ compared to JEPQ. Now, that doesn't necessarily mean that's a bad thing. Volatility or higher beta either way doesn't necessarily mean it's bad. But it is important for investors to understand the underlying holdings are definitely going to change how JEPQ is going to trade in the future, especially for investors like myself that have been holding onto something like JEPQ for a while. JEPQ is a whole nother beast. Now, another important comparison from JEPQ to JEPQ is JEPQ has $3.4 billion in assets under management, which is significant and pretty impressive for a fund that's been around just around a year. Now, JEPQ, for example, has $26.63 billion in assets under management. So it's only a matter of time until JEPQ probably gets up somewhere close to this, if I were to guess, but at this time, JEPQ is much bigger than JEPQ still. Next, let's look into JEPQ's dividends and what it's paid out since the fund's inception. So JEPQ's last dividend was announced on the 1st of June, and it's only 36 cents. Now, I say only because in the past months, JEPQ has paid out things like 48 cents, 45 cents, 43 cents, 44 cents, and before then, JEPQ was paying out 58 cents in the month of December last year, 55 in the month of November, and even 68 cents in the month of October. So of course, a lot like any other covered call fund, JEPQ, along with JEPQ, along with Q Yield, all these different covered call funds are going to pay out a different dividend on a monthly basis, depending on what happens in the market during that specific time frame. But what I will say that's pretty impressive is the total return for JEPQ and JEPQ over the 1-year time frame. Now, over the 1-year time frame, total return, which is dividends plus share price included, JEPQ has returned 21.04%, where JEPQ's returned 12.56%. Now, either way, no matter how you want to look at this, both of these funds have returned a good amount over the last 364 days. But because of the underlying holdings, JEPQ has almost doubled that of JEPQ as far as total return goes. So at this point, we might still have the question, is JEPQ worth investing into, or should dividend-focused investors stick with JEPQ? Now, for me personally, I currently hold over 500 shares of JEPQ throughout my multiple portfolios, and as of recently, I have honestly been buying some shares of JEPQ. Now, the reason that I'm buying more shares of JEPQ is because I'm okay and I can stomach a little bit more volatility as far as the upside and the downside, and because now that you understand the exact holdings of JEPQ versus JEPQ, it's going to be much more obvious on why each of the funds trade the way they do, depending on what's going on in the markets. But I want to hear what you guys think down below about the newer income ETF known as JEPQ. Is this ETF something that you'd buy into? Or do you think this ETF has trouble written all over it? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always for stopping by, guys, and I'll see you in the next one.